3, 2, 1. Welcome to the Forex Trading Show. Forex trading live every weekday morning. Real trades, real profits, zero analysis. Set back, relax, and get ready to profit. And now, your host, Terry from FXWithTerry.com.
Good morning, fellow traders. We launched just a little bit early. I'm going to give everybody just a little bit of time to enter here. I did something different today. I scheduled this live session 13 hours ago. So I'm wondering if that brings in some more people in terms of, getting themselves notified. When you schedule a live on YouTube, you get the option to click notify me, and it will do that. So I'm live about a minute early. Here we are. It's 11 a.m. Let me know that you're here. I know I started a little bit early. A lot to talk about today, and it's going to be a stream of consciousness, mostly about risk and taking risk and mindset, and probably something I need to spend a lot more time on. Because busy people love to subscribe to my automated system, take massive amounts of risk and ignore it until they feel the little pucker factor, if you know what I mean by that, and then panic sets in. So we need to get away from that. Let's open up here. We have no free signal. I'm going to launch it now. However, we're getting a slow start here. Does anybody want the free trade launched? I guess I'll just sip on my coffee until we get some engagement. I'm curious. I think there's about a 30-second delay when you do live YouTube, so we'll see. What's my coffee cup say? It's fine. I'm fine. Everything's fine. Everything's perfectly fine. I got the lights really low this morning, so maybe it looks like my video camera is dark. Still not a comment in the live. It's interesting. I guess people, I don't know, I'm curious. Where are you watching this at? Are you watching this in the private group so you don't have access to the live comments and the live chat? Are you watching this on YouTube? Maybe you're at work. Maybe you can't comment. Maybe you're on mobile. You don't know how to comment. A lot of scenarios there. We'll see. Should I act like I'm not looking for engagement and I just, like normally what I do is just come on here and go, and there's nobody saying a word. Although I know there's hundreds and hundreds of people in the group and people watch the replay. Well, check this out. Derek says, I'm listening from Arizona. Derek, and here's Mark, it's like the same two people every day for a year. Love you guys, but when are we going to start bringing in some more people that are paying attention? I'm over here talking to my fucking self. Basically what I've been doing is just playing this organically, right? I just literally go live. I really have not done any marketing or made much of an attempt to build the group. Mark says, what did Mark say? I'm out and about watching on my phone. Okay. So there's that kind of stuff, right? Like there's the diehards. It's just interesting to me. Well, you guys already know every fucking thing I'm about to say today when it comes to risk, but you know what? I'll shut up. Doesn't matter if anybody's fucking watching at all, right? So let's launch the free trade. I've already determined what that's going to be. Give me a quick pause moment here. I'll talk you through it, and then I will launch this live on screen. Just need to double check something here. All right, we are in the right position to do what I'm about to do. So here you can see there's no trade. Now I'm going to go to the pause screen. Give me a second. And I'm going to launch this trade. And here it is. Euro USD buy. This is going to be a good trade. This will be a profitable trade. We just closed, look at the history here, AUD USD sell trade at like a $4.52 profit. That was the weirdest trade and movement. I don't know what was going on there. I think we held that trade for a couple days for it to just go absolutely sideways. And then what happened this morning is before the high impact in this, I'm just speculating here, but this is kind of what I've seen happening. We had some 10 a.m. Eastern time high impact news. In fact, let's just go look at that. So you can see here, 10 a.m. US dollar, US dollar. At 5 a.m., the euro, that really affected the market and affected it in our sense. It pushed most of the trades we had open closed. You're going to see like a pretty fucking amazing amount of movement. Everything's been going sideways. This news cycle pushed 95% of it closed in profit. And there's a few trades still open. What I seen happening is when the stock market opened this morning at 9:30 a.m. Eastern, 30 minutes before this 10 a.m. high impact news, it started pushing a lot of things closed. So it's like we can sit here and look at the news. They love to move the market based off of the news. However, it seemed to me that they were pushing it because of whatever's going on in the stock market. I don't know what is going on, right? It's obviously some sort of push. But we had a pullback, a push against our sell trade on gold, and that caused a lot of panic this morning. I don't know why, but we're going to talk about why, and it's because of risk. It's how you deal with risk. And not many people deal with risk very well. Love to take it, don't know how to deal with it. So we'll talk about that as much as we can, and we'll continue to do so. It's an ongoing thing. Listen, the experience that I give you is exactly that. I live this. I watch this. I was making a comment the other day at 2 o'clock in the morning. Someone said this. I said this. I showed some trades, and someone was like, "Do you sleep?" I absolutely sleep. But I also pay attention to everything that's going on with my system, with the market. I'm just into it. I'm paying attention to it. And because I can see what the market does, high volume, low volume, crazy pushes against, pushes on currency pairs that have no high impact news, currency pairs that have very tiny movement and, like 30 pips a day, and then all of a sudden they move 300. No news on them. Who knows why, right? Who really knows why? And I don't care why as much as, hey, this is happening. This is what we're going to do. So, back to this, that AUD USD trade, I don't even know, man. I would tell you this. This morning when it closed, there was a large spread, I believe, and that caused this trade to close with a lot less profit than we would expect. They jacked up the spread. The fee was high. If you look at it here, we really didn't pay much. We paid a swap fee of 12 cents and a trade entry fee of 60 cents, right? But now, obviously, if you bid more, you made more. A lot of people are bidding less than $0.101 because they're trading a lot. Maybe you might even call it over trading. Mark says, the better you learn trade management, the easier it is to stomach the high risk. Yeah, you know what? We're going to talk about that, and I'm going to flip that around, because what people are doing is taking high risk and having no desire or ability or time to learn trade management at all. So all what they do is they panic and they come to me. Well, what do I do now? I'm going to tell you when you should start panicking, right? Most people panic way, way, way before they need to panic. So let's see here. Got another comment. Watching from South Africa, my second week following you, up 4%. My account is small for my paid signals, but you can bet I'm working towards it. That's cool. That's very cool. Excited to have you, especially from South Africa. That is very cool. So I'm getting off track here. Euro USD buy. It's very good. The take profit right now is 1.11079. Set it, do it, manage it, and we'll keep up on it in the group if Euro USD goes deeper. The main algorithm currently has 3 Euro USDs open. I'm simply giving you the third one, which is great. It's going to work. It's going to work extremely well. If you go look at the chart here, the price has pushed down. We are in a buy. Looks like it's going to, if you look at the RSI 4 down here, looks like it's going to rotate and come back up, very possibly. And it also kind of needs to fill this fair market value gap. In fact, if I were to be specific here, the fair market value gap is about right here, right? So at some point, it's going to come back up and fill this. Our TP is up here. So we'll see what happens. If it adds some more trades, then it'll drag our TP down and come even closer. So this is going to be a really good trade. Euro USD, here's what's interesting, and this is why I launched it also. It's Tuesday. On Friday is NFP, non-farm payroll. It always jacks up Euro USD. So it'll either push us deeper into profit, more profitable trades, or it'll push us directly to profit. It'll either add more trades or push us to profit. So yeah, that's it there. Let's go. We'll look at some of the other accounts, and then I said, I'm just going to talk about mindset and risk. And yeah, mindset bores the shit out of people for some reason. But I'm going to say it in the sense that mindset of how to think about Forex, and I won't be able to get it all out at once because experience is one thing. Saying it in words to you is often quite different. So experience is, you want to be experienced? Watch the live every day. Watch the accounts. Ask the questions. You don't know what you don't know. Ask the questions. Let's jump and look at a few of the other accounts. Let's jump over. I'm going to show you, I think, something kind of amazing. Let's jump right to the full algorithm. Let's look at it right now. And kind of blew me away. I'm just going to share this with you. $263, $260 drawdown. Look how many trades are open, meaning look how many trades are not open. This is the entire market right now. Notice I launched you the Euro USD. I launched the third one in the sequence, the most recent. So this is going to be really, really good trade. This is everything that's open right now and extremely rare. Out of 22 currency pairs, we have what, 3, 4, 5, 6, 7, 8 trades open. Look how much pushed and closed. This is about double, maybe even quadruple from, well, certainly quadruple of what it was yesterday. Yesterday we had closed about $105 from the overall system at this point. $474.68. That's a lot of closures. It's like they were holding off until today to just close all that stuff. Now, we will look at, well, before I even get there, I'm not even going to say it. We're going to look at something next in sequence. So for the week, that puts us at $2,097.59, and for the month, $15,512. These are numbers to remember on a daily basis because this gives us the sense. I'm looking at drawdown up here, $250. I'm looking at number of trades open. I'm looking at history. I'm looking at how much is closed for the day, the week, the month, right? When you look at that every day, If you're a subscriber, you have access to this. It's called the Premium Signals Monitor. When you look at that every day, you get a feel for what the market is doing. Now, I said yesterday you could trade more and bid more. I still got a lot of panic this morning when the gold trade pushed against. And we're going to talk about that mindset and what's going on there. What you should do, what you shouldn't do. I'm going to start moving towards a model where I don't tell you what you shouldn't do. I'm going to tell you what's possible because you have to live inside of the risk that you take. If you're going to take high risk, and I'm going to tell you someone that took high risk, and kind of blows my mind that people are still doing this, but hey, I have no problem. You should take high risk. But you also have to be able to think about it properly and manage your account properly. Do not be the person, and which is pretty much everybody that I get, do not be the person that takes high risk and has no idea what to do when they feel like that risk might have been too much in the current market. It just boggles my mind. If you don't have the ability to know exactly what to do at exactly the right time, like when to hedge, when not to hedge, when to start cutting losses, if you don't know how and when you should do that, if you don't have a written, detailed plan, please do not take high risk. Because you're absolutely gambling, and that's okay. But why? When you have me, I'm willing to sit here and talk to you for 12 freaking hours straight until you get it. I go live every day. Interestingly enough, I've been doing this for about a year now, live every day. Pretty much no one says a goddamn word. Rarely is there a question. It's a question once a month, right? Now, I thought about that a lot, and it's because my system's automated and it can just handle itself, but a lot of it is people lulling themselves. I see some people doing this in the group that are private messaging me right now. Ding, 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 ding. They lull themselves into this sense of, well, it'll work itself out. Well, if that's the risk taker that you are, if you're the risk taker that says, well, we'll see how it works out, then you're a massive fucking risk taker and you just have to live inside of that stress and pain, right? I don't like it myself. So that's the overall algorithm. Looking really good. The market has cleared itself out. If we go look at, I think they're gearing up for non-farm payroll on Friday. Let's go look at what's going to happen tomorrow news-wise. U.S. dollar, ADP, non-farm employment. I don't even know what that is, but that's 8:15 a.m. Just some U.S. dollar. That's Wednesday. Thursday, Swiss franc, U.S. dollar, and then Friday you can see here, non-farm payroll, all launching at 8:30 a.m. By the way, BTW, I have a very early morning appointment tomorrow, so I may not be live at the regular time. When I get back from that appointment, which could be after 12 noon Eastern time, then we'll do a live. So just beware. I'm going to be a little bit off time, off schedule tomorrow. Let's pause here and let's go look at gold itself, but I'm going to look at it on the test account, so we'll kind of look at everything at once. The test account is the one profitable pair feed. It's the gold. Let's go look at what gold's doing right now. Gold has given most people a pucker factor this morning, but let's talk about what's going on. Let me share this with you. This is my test sample account where I'm taking gold scalper trades, and I'm taking the one profitable pair feed. Right now, there is no, oddly, I have to think about this, if I manipulated this. Oddly, there is no one profitable pair. You know what? Let's go, stand by. Now that I think about it, I'm going to go look at the one profitable pair feed real quick. I'll share it with you once I see it. Let's see here. It is this account, I believe. Yeah, oddly, It is not trading. All right. Hold on a second. I'm going to look at my server here and make sure that everything is functioning properly. Let's see. One profitable pair feed. Here it is. Everything looks... Let me make sure I'm in the right section here. Oh, I bet I know why. I might have... No. I thought I had it dedicated. Oh, I know why. I'll share this with you. Give me a second here. So I had the one profitable pair feed. Yeah. I know why it's not trading. I'm going to go ahead. I was sending you guys trades from the one profitable pair feed, and I told the AI system, because we had a good amount of volume, I said only trade one profitable pair that's went at least 3 deep, right? So I'm going to go ahead and put it back to 0. So it should grab the next trade that comes in will show in the one profitable pair feed. Sorry about that. So let me make sure I'm looking at the right thing here before I share my screen back with you. Let's see, what were we looking at? We were looking at this one. Anyway, back to the gold. Okay. I had slowed down the one profitable pair feed because we'd had a good amount of volume, so I was just grabbing the third trade in a sequence of trades, and because the volume's a little bit low right now, it wasn't grabbing a pair. That's probably good for somebody. Somebody had asked me to turn off their one profitable pair feed this morning because they were over leveraged on gold. Now, you're going to feel like, let's actually look at the chart here on gold. So we had a massive push up. Everyone said, why did the system not continue to sell up here? It's because we were within a window of news release this morning, so it didn't. My AI system on gold is intended to not release additional trades during a high-impact news event. So it's pulled back a little bit. In fact, if you see here, it looks like the wick came all the way down to here. Is that true? Wow, it did. So we're letting this play out, right? This is going to play out the way it's going to play out. There's quite a bit of, man, I'm going to zoom in here and see if I can see that wick at all. Yeah, that wick came all the way down to here. So it's almost covered that fair market value gap almost completely. So who knows where it's going from here. But we're in these trades. I'm way overbidding. So you can see this. On a $4,100 account, I'm $866 drawdown. The key factor here is my margin level percent, 1,500. I'm perfectly fine with it. I am not... My method of management would be to hedge. I am not going to hedge. In fact, one of the things I need to do before we go too far here, everything happening at once, I'm going to tell this particular account to not copy the one profitable pair feed. So give me a second here while I do that. And this is something that you would do also if you were trading an account like I am and you know, over risking it a little bit. Stand by. I'm going to click some things on my end, and I'm going to tell the system to not take any one profitable pair trades. Just going to click don't copy. I'm going to stay and remain in the gold. We'll come back here and show you. So basically just did some management here. I said, hey, on this account that is accepting my one profitable pair feed and gold scalper, let's put all the power into gold scalper. I'm going to leave that. I'm not going to accept any other pairs on this account. And frankly, if you look at the chart here, pucker factor started to happen up here. I started getting a lot of messages. People wondering what to do. And when you start getting these wicks, and I'm speculating here, right? When you start getting these wicks at the top, it's probably not a good time to hedge, because had you done a panic and hedged right here, it would have pulled back that far and your hedge would have been negative also. It would have protected your account from bleeding off anymore. But what I'm looking to do is hedge when it continues to push this way and hedge. Now, it may push back up. I'm probably going to hedge when it looks like, I'll scale down to a smaller time frame here, 15 minute, 5 minute. See how the price is pretty much sideways right now? We're looking at the 5 minute chart. Let me zoom a little bit here. When am I going to hedge? I'm probably going to hedge when we get through this, if it pushes up through this rotation right here. And I feel like there's some volume. Now, we're already basically out of the high volume. This is gold, the high volume part of the day. Sometimes around 2 p.m., 3 p.m. Eastern time, you'll see another push. So we'll watch. But here's the thing about hedging at this point. If you feel like you need to hedge gold because you bid more than you probably should for your account. We'll talk about that in a minute here. I would be watching this closely. I'm probably not going to hedge on the 5 minute. Probably going to hedge on at least the hour time frame. But you can see how it's just rotating sideways here. Okay. I'm going to hedge if I feel, I'm going to have to sit here and watch it if I feel like I'm in the hedge range. At 1,500% margin, I'm not in the hedge range for my risk. I had people messaging me at 2,500% margin level this morning, absolutely panicking. I'm like, bro, if you're going to take that much risk, don't shit yourself at 2,500% margin level. If you want to shit yourself and panic, do it at 500% margin level. I'm not saying you should let it get that far, but certainly a lot of us at about 1,000% margin level, we're like, okay, I'm going to need to do some protection. In this particular case, let's look at history here. I'm going to go down to, let's take this 5 minute, and I'm going to use this as educational purposes. This candle here was our big push up, okay? This was our big push up. And then you kept getting these wicks and a little bit of push up. Here's the deal. Let's say that you hedged right here and none of this history. Let's say you hedged right here at this point. Price pushed up, pushed up, pushed up. When it comes back down and touches your hedge, get the hell out. Don't hold a negative hedge. Don't let it go through your hedge. Okay? So this becomes your hedge level. When it pushed back through a little tiny bit, I'm ready to hedge, but I wouldn't have because it didn't sustain that. It's come back down. Now it's right back at my hedge level. Hedge level meaning, is this thing going to push up very much farther? Because it's probably just going to rotate around this. But as a trader, I'm like, well, this is that trade that happens every couple weeks that I'm going to have to watch. So if it starts getting much higher than this, had I hedged earlier, I've not hedged yet, but had I hedged earlier, I would start hedging. And if it pushes, great, I'll hold the hedge. If it immediately rotates against me, I get out of the hedge. Sometimes when you get in this rotation area, you might have to enter a hedge, get out, enter a hedge, get out, enter a hedge, get out. It sucks. Okay. You might at that point say, okay, I'm not going to hedge until we break. Excuse me. I'm not going to hedge until we break the most recent high, which is over here. Remember, we're looking at the 5 minute chart. I'd probably be looking at a higher time frame. Hour, 4 hour. Yeah. I typically look at about the 4 hour. You look at whatever you want. There's no rhyme or reason, right? A lot of it's just visual for me, so I can, 4 hours kind of slows things down. I can see that the rotation high over here, the wick was all the way up here. Got a wick here, got a couple wicks here. So this is pretty much the area. So So if I'm going to hedge, I'm probably going to do it based off of this level, the most recent high. And if it pushes back up to that, I'll hedge. If it rotates right back, I'll get out of the hedge. But a lot of it, I shouldn't say a lot of it, all of it is based off of my margin level percent. If you're a risk taker, at about 1,000% margin level is when you need to make that management decision. Not at 2,500%. Don't be a pussy. If you're going to be Mr. Risk or Mr. or Mrs. Risk, take the risk. It's like gambling. Put it all on the line, right? Now, if you don't want to be taking risk, don't do what I seen someone do this morning. Someone is trading a medium-size account. I don't want to get too specific. You know who you are. They're trading the full algorithm, and they're trading gold at a 9x. Gold at 9x, full algorithm at 2x. I'm like, and you're panicking at 2,500%, taking that much risk, trading the full algorithm and gold at a 9x. You are one of the riskiest people I've ever met in my life. You don't know that, because here's what that person heard. And this is a person that's busy. I get it. But, they hear something and they take it as gospel. I had said in the past, I gave you like a bid recommendation per 10,000, right? They took that, which is fine on the full algorithm, but then did 9x on gold. Gold is one of the riskiest pairs / metal that you can trade in the world. It's risky. It's pushing against right now. Let's go look at the chart. I was looking at the chart. This is the kind of what I'm about to say here and what I'm saying. You can't fucking teach it, right? That's massive risk. Trading the full algorithm and 9x bid on gold. 9x. There's nothing wrong with that, but I can also tell that this person has no plan of what to do. I'm not picking on this person. This is a perfect example, and 8 other people messaged me this morning. It could be any one of those 8 people. Listen, don't fucking get all emotional. No one's saying your name, okay? I'm using it as an example and a concept. This is the part that I can't impart to you other than experience. I can tell the way you think by the way you tell me you're going to manage your trades. Let me see if I can kind of throw out some of the things I heard this morning. One is, should I start cutting losses now? And I look, and I'm like 2,500% margin level? Cutting losses now based off of what we know the full algorithm is doing, which closed out a lot of trades. We only have 8 trades open. I'm like, I don't think you need to cut losses on that. There's nothing running away. Gold at a 9x that has started to run away a little bit on us starts giving the pucker factor. If you're trading the full algorithm, standard currency pairs, and you're trading gold, and gold runs away on you, you don't have to worry. I shouldn't say this. The focus is probably not the full algorithm. It's not running away on you. It's the gold, right? If you don't have the ability to manage dozens of currency pairs all running away on you at once, you probably shouldn't trade the full algorithm and or gold at a 9x, high bid factor. The next sentiment was, well, I guess I'll just let it run and see what happens. Please don't do that either. That's how you lose your account. Don't be the person that says, well, we'll see, because it's going to go, it's going to go, it's going to go, it's going to push, it's going to push, it's going to push. You're not going to know what to do. I'm going to give you a general idea. First off, if you're going to trade high risk, which is a trading the full algorithm, massive risk. Adding gold on top of that, massive risk. It's nothing wrong with it. Most of the time, 95% of the time, you'll crush. But there'll be that one day when a bunch of currency pairs push against and gold pushes against, and you're in trouble. You have to be able to, the more pairs you trade, the more mental capacity you have to be able to hedge a basket of trades on a regular currency pair and hedge gold. If you aren't practicing doing that, if you don't have a demo account where you're pushing the daylights out of it, and what I suggest you do is set up a demo account, copy my automated feed or feeds, bid a lot, and practice hedging to protect a trade from running from you. And I'll say this about the hedge. The hedge is an equal and opposite order that stops the account from bleeding. If we are in a bunch of sell trades here, you're going to do a buy trade up in this area that's equal and opposite to the number of lots that you're in. And you're literally just protecting your account. Because we know we're in a sell trade. The price is eventually going to go there, or we're going to add more trades, but it's still in the sell direction, and take profit is, although gold does not show the take profit, we know the take profit is somewhere down in here. Okay? We just know it is. The hedge is simply a protection. You're not trying to hedge and make money, and hedge and make money, and hedge and make money from your hedge. Your hedge is to protect your account because you went too far. But until you start practicing this, you're in trouble. One of the things that drives me batshit crazy, but I can handle it, I'm starting to handle it more differently, is when a trade like this pushes, I get a bunch of messages, what do I do, what do I do, what do I do? My answer from now on, instead of trying to deal with it in that moment, I'm going to be, well, you should watch my live sessions every day. And you should be asking questions. You should be practicing on a demo account, copying my feeds, pushing the limits out of it, and hedging to protect any given currency pair, basket of trades, or metal/gold. You should be hedging to protect those trades. What I do, I'm going to say this pretty simply. If I hedge and the price pushes through my hedge, this hedge is a buy trade. If I hedge and it pushes through, cool. When it comes back to my hedge, I get the hell out. That's it. It's simply a protection order. If I hedge again right here, a buy trade, when all of these sells are going on, if I do a hedge right here and it pulls back, I get the hell out. Tiny loss. Get out. I don't want my hedge to go negative money. I don't want it to go negative money. Now you can be advanced and you can set your hedge right here. And then you can set a stop loss. Which is basically, you can set a stop loss or set a stop loss. Put it that way. So if it pushes up and comes back, it gets you the hell out. Especially if you can't stare at it. Set a really tight stop loss. The hedge is simply a protection order. That's all it is. I'm not trying to make money on it. I'm not trying to get that hedge. Now, there are times when it has pushed so far, we could potentially hedge and be profitable up here on the hedge and close the losses down here and get out near break even or a small loss. But that's pretty advanced stuff. If you just think about the hedge as the protection order, if you don't start practicing this, you're not going to like me very much when you come to me in the middle of the night, panicked that you're at 430% margin level because you're over trading and overbidding. I put it this way, because you're taking more risk than you probably should. I'm not going to call it over trading, overbidding. I'm going to go, oh, well, the answer to what you're doing is to do a hedge protection order. If you don't know what that is, I don't know what to tell you. Because I talk about it all the time, and you have the ability, you should be practicing hedging and protection orders every day, all day. Let your live accounts, do what they're going to do. Because what's cool about that, let's say we didn't know, we got this, let's say we didn't, let's say this 4-hour red candle is not there right now. Just this big green push right here. If you felt like you had to hedge, then you hedge. It pulls back, you get out. You might even take a little loss on that. But it's not a big deal. It is not a big deal. Until you practice it, you don't know how to do it. You don't know what to expect. You've got to figure out what that level is. And for me and a lot of people, and maybe it should be set higher than you, but for me, it's about 1,000% margin level when I start going, is this thing going to rotate back around? Do I need to hedge right now? A lot of times, here's what sucks. A lot of times when it pushes too far for you and you hedge right at the rotation. So it's like up and down. It just rotates around that hedge. And you're like in and out, in and out, in and out. If you're not careful, you end up taking a loss. Little losses add up to a bigger loss. And so I'm like, all right, be careful hedging at the rotation, which is really where we're at right now. One thing you can look at is the RSI 4 down here. You can see what it's doing. It pushed right up to the 85% level or 84%, 83, and it's coming back down. That's the tough thing to call, when to hedge. I typically base it off of margin level percent, but also I have to look at, if this is the 4-hour, I'm looking at where the previous rotation area is. I'm like, okay, we're at about rotation. Hedging's not going to help me much. Maybe I got to let it go farther. That's why I start making a decision at 1,000% margin level. If you want to do 2,000% margin level, then make your decision there. But if you're a high risk person and you're not, and you're panicking at 2,500% margin level, you're not really a high risk person. You kind of want it to be, but you're not. High risk is obviously high risk for you. But start making some management decisions once you get down around 1,000%. Don't be high risk and wanting to start cutting losses at 2,500% margin level. Again, that's my, hey, don't listen to me. I'm an idiot, right? Remember this part right here. I'm an idiot, okay? Don't listen to me. It's all for entertainment purposes. Or listen to me and at least go out and practice and try. So I think that is what I wanted to look at. I will tell you, I'm pretty excited about the results that I'm getting here. We've had this account for a week, and we've made 120%. I don't know, something. What have we made for the week? $1,176.98 on a $3,000 account. It's high risk, but I'm perfectly fine right now. I feel no panic at 1,600% margin level. None. At 1,000, I will hedge gold. I turned off the one profitable pair to this feed, so any one profitable pair trade that comes in, I'm not going to get it. And if I was in some, I'd be making if I was in a standard currency pair also right now, I'd be making a decision. What is that decision? I don't know. How negative is it? What's the overall system looks like? What's the premium signals monitor account look like? And like I said, we looked at it. What was it? $250 drawdown, 8 trades out of 22 currency pairs. We're like, okay, volume's way low. We're good. I don't believe there's going to be any runaway right now. You have to make that decision based off of what's going on. Do not be the person that says, well, I don't really know how to hedge. I don't really know what to do at X% margin level. So I'm going to throw a bunch of ideas out there. Should I do this? Should I do this? Should I do this? Should I do this? Have a fucking plan, please. and practice hedging. Don't be the person that says, well, because I'm never going to go, well, hey, you definitely should start cutting losses. Boy, you're going to get so far down before I start telling you to do that. But don't be the person that says, well, I don't really have a plan, so we'll just kind of watch it. We'll just watch it. You'll watch it run itself into the ground. You have to have a plan. The only way to have a plan for you is to practice on your end. Maybe 1,000% margin level is way too low for you to be doing any hedging. Maybe it is. That's fine. It's not for me. I practice a lot. I continue to. I have demo accounts that I'm practicing on. I mean, hell, this is pretty much the major one that I'm practicing on right now, and I'm sharing it with you. We started a $3,000 account a week ago. I'm bidding a 5x on gold, and I'm bidding a 15x on standard, one profitable pair feed. And we're crushing it. We've done nearly what, 12%. Am I saying that right? No. I'm thinking of something else. We've done nearly 50% return on investment this week in this small account. Nearly 50%. That's pretty amazing. High risk, but I'm not panicking right now. At 1,600% margin level, perfectly fine. All right, I'm going to stop there. Again, the live show will be later tomorrow because I have an appointment early in the morning. I just talked for 45 minutes. We need to continue talking about this. I'm not singling out any one person. I'm sure, I've had a lot of private conversations this morning and probably talked about 2 or 3 things that people have said. So don't feel like I'm singling you out. But if you're also someone who does not have the ability to hover over your account and truly have a plan of management, I'm not going to allow people. I shouldn't say I'm not going to allow. I'm not going to panic myself when 8 panickers come to me because they've overbid and a currency is going against them. I'm like, show me your numbers, right? Show me your numbers. What do I want to see? I want to know what feed you're trading. I want to see what your margin level percent is. That's what I want to see. At that point, start making decisions. Until you guys start practicing hedging and overbidding on a demo account and hedging that, I don't know what else to tell you. Practice it. It's going to happen. Happens all the time. Happens half dozen times a year at least. Happens 10 times a year. So that's it. Appreciate you watching. I'm done for the day. Take care. Happy trading. I'll see you soon.
Thank you for joining us on the Forex Trading Daily Live Show. Get access to all of the free trades with full auto trading at fxwithterry.com. Be sure to subscribe and get notified of the daily live stream. And get ready for your next profitable Forex trade.